Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 28th of October, Friday, last day of the week, and the aftermath of Apple and Amazon earnings. So yesterday, after Apple reported earnings, they beat top and bottom estimates, but revenue from iPad, iPhones, and services were down. So initially, the stock sold out, but then I think a lot of investors and traders took the opportunity to buy the dip, and it's basically holding. It's quite strong, and it had helped the Nasdaq to stay strong during overnight. As you can see, we fell down due to Amazon earnings. Amazon earnings were quite mixed, beat EPS, missed revenue, and the outlook forecast for the last quarter of the year is quite bad. So I think Apple saved the day. You can see if we checked from bottom until close, Amazon bounced 10%, and initially it fell 12%. It was quite heavy, the initial sell-off, until 21%, but finished the day more or less 13%. And right now it's flat, it's consolidating, same as for Apple, is consolidating. Apple took a nice bounce. I think if you bought the dip down here, you got a nice discount of almost 7%. Almost 7% in profit in after hours due to earnings. I mean, that's crazy return. So Nasdaq is holding, and where we are right now, we have to check the 30-minute chart to see the overall picture. So as I was saying yesterday in the forecast, we fell down, we broke this level, this previous support at 11,400 was broken down, and during the day yesterday we were basically super bearish, grinding, breaking down until 11,200, and then earnings came. We took the fall until 11,000, and even 10,900 was the lowest of the day, and it was super crazy. And we are in that range. We are in the middle, not in yesterday's range, because range is starting 11,200. This is the range. We are out of range, out of value, but we are more or less trading sideways in the middle of nowhere from yesterday. So our expectations today is staying flat until PCE, personal expenditure, is coming today, and this is a critical economic data release that Fed is watching for upcoming future interest rate hikes. So we are still pricing in a big 75%, not this one. So we are still pricing in with 86% of probability a 75 basis points interest rate hike. So next week, in 5 days, Fed is going to again basically hike interest rates, and they are watching this PCE. I don't know if this PCE comes hotter than expected, if they will change for 100, so 1%, or if this personal spending PCE is coming way lower than expected. That means spending, consumer spending, is going lower. Maybe they will decrease from 75 to 50. I think anything can happen. This data point is super important for them. So we have to watch for that. In more or less half an hour at 8:30 Eastern Time, we will be expecting 0.4, and the consensus is the same, 0.4, but maybe we can have 0.3. And if PCE comes lower than forecasted, 0.3 for example, that would push the market up for sure. So be prepared for this. 8:30, 1 hour before market opens, in 30 minutes from now, I think we can have a very nice day if we have a nice data. So what else I'm watching? What else is important in this situation? So dollar, DXY bounced from 109 and it's currently uptrending, reclaiming this EMA and for now rejecting the 200 and this pivot right here. So this is the bounce that we got. And we have also to take into account this pivot. It's super interesting that at 111. So we are right now in the 30 minute and in the 5 minute, we are pulling back, but we are holding that level. So be careful because I think if dollar breaks up again that pivot, we might have more issues today. Strong dollar is bad for the economy, so be careful with that. Watch out for the prices, set your alarms. And personally, I think a lot of supply will be met at this level and dollar will continue weakening. Overall picture, dollar is still going down, weakening, and I think that's the future for the coming weeks. But anything can happen, so you have to watch your levels, follow up on it, but be careful with this pivot. Follow that. Also interesting and critical for this situation, yields, 10-year overall picture still pulling back. Let's change to the 1 hour. So we have this situation. We were sideways. We pushed 1 week ago, one week and a half ago, and since then, since Friday last week, we've been, since 1 week, 7 days, we've been pulling back. And this has helped a lot for earnings this week. And the overall consensus, yields going down, is good for the economy. So as you know, yields are bad for the current situation and are inverse correlated with the market. So if yields go down, we should see market going up. But this is a tricky situation because big tech companies are reporting earnings and there's a mixed sentiment. So, but forget right now about those companies and let's focus on yields and dollar. Dollar weakened a lot, is showing weakness. Yields are showing weakness also. 10-year is pulling back. 2-year is also pulling back. Is bouncing off support, previous consolidation, but all this level right here above is being denied and rejected. So right now we are in the 10-year at 4%. It's quite a good rating and we are pricing in for December this year. We are pricing in 4%. So I was saying yesterday during the live stream, if you didn't see that live stream, please check it out. I was saying December this year is pricing in 4%. And if we check what we are expecting for the Fed is 75 basis points next week to reach 4%, 375, 4%. So bond yields, bonds market are pricing in only this upcoming week rate hike, but maybe in December, right now, they are not pricing in any hike. Maybe 25, but right now, I think bonds market are trying to say, we believe that with this change in labor market, housing market, earnings, economy is cooling, and we are starting to see weakness in the economy, but we don't want to see destruction to destroy the economy. So maybe Fed will pivot knowing that, and today's PCE is a big piece of data for Feds to decide. Maybe next hike, December, we will not be raising that much interest rate hikes, and maybe we can stay with 25 or even maybe 50. For sure, I think 75 or lower. And it would be crazy for the end of year push of the market. So watch yields because they are showing a picture that no one else is paying attention to. Everyone is focusing on the earnings and how these big tech companies are reporting bad and mixed earnings, but we have to stay focused on the economy. Dollar is weakening, yields are weakening, treasury bonds are going higher. This is why yields are going lower. So bonds are starting to raise and high yield corporate rates are breaking out. This is key. So everything is correlated with an overall sentiment of bullish, good sentiment from the bonds market. Watch out for that. Forget a little bit about earnings and let's focus again on the economy. I think we are on track to see a Fed pivot on December this year. Next week, 75, but from then until end of the year, I think the story can change a lot. And that's my opinion. I think we have to watch what markets are trying to say, and that's my job, to explain to you why I think markets is changing and it's changing for good. Today, yields are green, but it all depends on PCE and what we have been seeing the last week. So I think that's all. Nasdaq still ranging. Remember, PCE in half an hour, it's super important, critical for futures Fed's decision. And apart from that, I think maybe consumer sentiment, home sales spending, but PCE is key for today. Hopefully we can have lower data, lower rating, and we can have some opportunities to the long side with a big squeeze. So as always, thank you for your time. Do remember, if you found this video useful, please click the like button and subscribe. I upload new videos every single day. Market forecast like this one, market updates at noon, and market recaps at market close. I appreciate your times. If you have any questions, please comment down below. And see you in a couple of hours with the market recap. Remember, day trading is discipline, risk management, patience. You have to have some sort of skills. You cannot chase. You need to analyze the market, to have your news, your data, and to take proper decisions. So discipline, risk management are key for your success. Watch out in half an hour for personal spending and see you at noon with the market update. Stay safe, everyone.